Hello, my name is Mike Sinibaldi and welcome to this week's video edition of Heard on the Street. In this edition, I'm only focusing my attention on the S&P. I'm doing so because I feel that the market may provide traders with a near-term opportunity. It also allows me to provide a lesson on measuring gaps and its application when applied to the wave principle. So let's get started. This 5-minute chart of the intraday session shows that price gapped up at the opening bell and continued higher for the day. The question remains, how do you know if the move after a gap will continue? I learned this trick from Jeff Kennedy, a senior analyst from EWI, which helps me determine if a move is sustainable and uses the principles of Fibonacci expansions as a measuring tool to determine possible price targets. To determine whether the move is sustainable, first measure the distance of the price bar that preceded the gap, as I've done. Next, project that distance from the high of the gapping bar. That's the breakout level. A decisive close above the breakout level indicates that the move is sustainable. A failure to do so would indicate that the move is most likely not sustainable and an attempt to close the gap is likely. Looking at the chart, a decisive close was made. Next, we calculate possible price targets by using the Fibonacci expansions. As you can see, the next significant target is 1323. With 1323 as our upside target, all we need to do is apply our retracement levels and wave count to determine the market's next logical termination point. On Friday, I tweeted a possible alternative wave interpretation along with an upside target. Notice that the target was the 0.618 retracement and the 1.618 reverse Fibonacci retracement of wave B circle. This data is in agreement with the data that we determined from our gap analysis. But let's take this a step further. The next chart combines the operative wave labeling and the alternative count along with the corresponding retracement levels between 1343 and 1292.50 for each interpretation. Notice that there is agreement between 1323.25 to 75 and confluence with 1323. In conclusion, my upside targets remain firmly between 1323.25 and 1325.50. Now I know what you might be thinking, that the advance from 1292.50 to 1318.75 is only part of wave A of wave 2 circle. But I've thought about that, and frankly it doesn't matter, and here's why. My target still remains 1323.25 to 1325.50, and even if that is wave A, I'm still expecting a minimal decline to 1304 to 1305. So as a trader, we have three interpretations, all have a minimal upside potential to our target areas, followed by a decline to 1304 to 1305. From a trading perspective, we can reevaluate whether this is wave B of wave 2 circle or if a larger decline may be developing. I hope you found this video helpful and best of trading.